there's always a but, isn't there? The net loss was still quite high.
That's the key counterpoint, absolutely. Despite the positive adjusted EBITDA and free cash flow, the GAAP net loss for Q2 was still substantial, $71.8 million.
Which translates to a pretty big loss per share, 7.97 cents, I think.
That's right. Now, some of that loss is likely tied to one-time IPO-related expenses, stock-based compensation, things like that. But investors will absolutely need to see that bottom-line net loss numbers shrink significantly in the coming quarters. That's the main financial risk clouding the picture.
Okay, so improving operational metrics, but still a significant net loss to overcome. Let's talk about how they plan to keep the growth going and close that gap. The analysis points heavily towards Caris Assure. Why is that liquid biopsy test so central?
Several reasons. First, as we mentioned, it's a blood test. That makes it inherently more scalable than tissue biopsies, which require surgery or invasive procedures. Easier for the patient, easier for the doctor to order.
Lower barrier to entry.
Exactly. And that ease of use is critical for the really big future market opportunities, high-frequency testing.
You mean things like monitoring for cancer recurrence after treatment, that's minimal residual disease, or MRD?
Precisely. MRD testing needs to be done repeatedly over time. A simple blood draw makes that feasible. And the even bigger potential prize is multi-cancer early detection, or MCED, catching cancer earlier across many types using just a blood test.
Those are enormous markets compared to just therapy selection for late-stage cancer.
Orders of magnitude larger. If Caris Assure can prove effective and gain adoption in MRD and MCED, the potential test volume just explodes.
And the data supporting Assure looks promising.
It does. The One More Money Blood cited a recent validation study for the MCED application.